Jeffrey Owens. This is the fifth in our Fireside Chat series. You know, we started with America. We then moved on to the UK and Italy. We then jumped to China. And so it seems quite natural we come back to Europe with Germany, yes? And, you know, why Germany? Well, I think, you have a new government. I'm not sure.
Not yet.
You will have a new government.
We will.
Yeah. You can see the debate already starts.
Yeah.
I'm sure that tax is going to be somewhere within the agenda of that new government. And, of course, Germany continues to play quite a dominant role in the EU. I think that would be a fair statement, Michael, yes?
Yes.
Basically, yes, yeah. So the idea of these fireside chats, it's to encourage an informal discussion on issues that are high on the political agenda, yes? It's not intended to get into the technical details. We can do that in other fora. And part of the objective also is to stimulate a debate, yes? To get technicians, to get the people in this room to see the context in which they're undertaking their work, whether it's on treaties, on transfer pricing, or domestic tax policy. We have an audience. We have the audience here, and I'm pleased to see so many people have turned up. And, of course, we also have a wide audience around the world that are listening in to us. And I think at the last count, we had about almost 40 or 45 countries, in fact, that were out there. So thank you for sort of listening in to us for that. I'm very pleased to have Michael Sell. I think it's fair to say, Michael, you've played a pretty key role in the tax world in Germany and in the international tax world for very many years, yes? 20 years? 25 years?
But you overestimated if it's an important role. I'm a civil servant working up the ranks. That's
so
it.
You see, Michael's a very good civil servant. He basically takes decisions, but he tells the politicians it's up to them to decide things, yes? Yeah. So very pleased to have you, Michael, for that. The topic that we've got is emerging international tax issues in a post-BEPS world. BEPS. Is there anybody that doesn't know what BEPS stands for here? Put your hand up. Okay. It's base erosion and profit. Where have you been for the last 10 months? Yeah? I think you need to talk to him, Michael, yeah? So base erosion, profit shifting, and some of you may say, well, post-BEPS world? But we need to think about that. We need to think about where are we going to be when this project finishes, yes? So in a sense, we'll try to anticipate and provide an answer to that. We'll have the usual structure. It is going to be a conversation. It's going to be a series of questions and answers with a discussion between Michael and myself. There'll be 4 rounds of discussion. The first, we'll look at where's the BEPS debate heading. The second, then, we'll look at what are the rules that we require for the digital economy. Is it such a different thing that we need new rules? Do we need special rules for that part of the economy? And then the third thing is aggressive tax planning, yes? We need to have a debate that's balanced between aggressive tax planning and aggressive tax competition, yes? So what do we mean by aggressive tax competition? And then we'll finish up with a discussion on where does the EU fit into all of this, yes? What I thought I'll do, Michael, is just a few words of introduction on the context in which the BEPS debate is taking place. It's a bit of an understatement to say that the current economic recovery is hesitant, yes? I would actually say very hesitant, yeah? We ain't out of the woods yet. If you look at what's happening within Europe, I mean, it worries me when finance ministers get up and they celebrate that Europe's going to grow by 0.2%. I mean, things must be really bad when, you have to celebrate 0.2%, yeah? So I think, Europe, it ain't growing. Some economies are growing, yeah? But overall, I don't think the growth prospects are particularly good. The US, they've managed to get off one fiscal cliff, but they've actually jumped onto another one, and we're going to have the same debate in January and in February, yeah? And that is having a very negative effect on the world economy, yeah? In an uncertain economic environment, the last thing you want is political uncertainty, and that's what our friends in America have created, yes? A lot of political uncertainty. But then people say, we've got the BRICS. They're going to grow. Well, you know, are they? China, probably not going to get its double digit. They're aiming for 7%, yeah? I mean, 7% from a European perspective sounds great, yeah? From China, it's too low, yeah? It's not enough to avoid political problems there, yeah? The other BRICS, you know, Brazil, India, China, South Africa, I think they'll be lucky if they get 3% growth, yeah? So the whole world economy, it's a very uncertain one in terms of growth outlooks. And also, even countries that have growth are not having what I call a job-creating recovery, yes? I mean, in the OECD area today, you have 50 million people unemployed. That's the equivalent of the population of the UK, just less. And of that 50 million, there's a very significant number that are between the ages of 16 and 25, yeah? So what we are doing is we are producing a lost generation. People like yourselves that are paid to educate yourselves and then can't find a job. I'm sorry to depress you, yeah? But it's a reality. I mean, I was in Lisbon just last week, and you know, you had graduates who had spent a long time educating themselves and can't find a job. Yeah? So we need to address that. It's not just a question of growth. We need job creation as well. And then I think for this debate, what's particularly relevant is the whole question that the level of public debt, the level of deficits continues to be unacceptably high. Yeah? And we need to resolve that in the long time, in the long term as well. Yes. And finally, perhaps a comment that. I mean, I've worked on taxation for something like 40-odd years. I've never seen the degree of political interest in tax issues and of media interest. Yeah? And it brings me back to this Chinese expression, beware of getting what you wish for. Yeah? I always liked the idea of having tax on the front page of the Financial Times. Yeah? I'm not sure it's such a good idea these days. Yes? So that's a little bit the context, I think, for our discussions on the BEPS project itself. I mean, it's interesting to ask, what's this project about? Is it anything new? And the honest answer is, there is nothing new in the BEPS project. Every single issue that it tries to address was on the OECD's agenda for the last 10 years. What is new, it's put together as a package. And politically, that's interesting. And the second thing that's new, the enormous political support for this work. I mean, when you get the heads of the G20 governments, the heads of government come together and saying this is important, you know, that's quite a change in the environment. I mean, I always say, you know, 5 years ago, most of the heads of government couldn't even spell tax. Yeah? Suddenly, you know, tax has become the big topic in the G20. Yeah? So that's what's changed, and I think it puts an enormous pressure, you know, on the OECD to try to deliver on these projects. So that's a brief introduction on this topic. So, Michael, can I ask you then, the first question is, well, where do you see the BEPS going?
Yeah, the first answer I always give in discussions is describing myself with one sentence: I'm a fiscalist. So I'm on the revenue side of the tax policy issue, and there are two other groups, the purists, that are the judges, tax judges, who usually do the more academic work on this, and then we have the third group that are the artists, the tax advisors, doing their kind of job, and we are all working on the same issues from various directions. So don't be surprised. I have a strong viewpoint on creating revenue and therefore helping that we do not run in deficits anymore in the extent we had in the past. And seeing what countries or the situation of countries who have a non-working tax administration and a very, well, say...
Are you referring to any countries in particular?
No, an economic approach, I say again, no, economic approach to tax truthfulness. Therefore, you see a few results, and therefore I think it's very important to gain the revenue we not only expect, but we deserve. And the BEPS project, and that is the answer, I think the first answer, one argument for the BEPS project, it won't go away. The BEPS project started about, let's say, 10, 12, 15 months ago, and it hit the newspapers not only for the weekend edition of the FT and a few, from an economic point, minor newspapers. It has been apparent since then. It won't go away, and it won't be lobbied away. Being in tax policy issues for more or less 25 years, I haven't seen a single issue that has brought so much attention to the public, to the politicians, and demanded for conclusions. It's not just a topic that has been brought up and lobbied away, and it won't be lobbied away. So therefore, I'm pretty sure that we, with the OECD, deliver results. We cannot expect that every wish will be fulfilled, but we won't remain with a status quo that says, okay, it's very difficult and we didn't come to a conclusion and we must look further another 2, 3, 5 years into the issues, and that's it. So probably when the younger ones of you will make their, or will have their final examination, the topic will be apparent too, and therefore I'm pretty optimistic.
I think that's a fair
that it runs.
Yeah, that's a fair. I mean, in a sense, this is a project that's too big to fail. No? You cannot have 19 heads of government that come together and say we're going to do something. So whatever will happen, something will happen. Yeah, and it has to be presented in terms that the average journalist can understand that it's a success. Yeah.
Yeah.
That's important because then the public can see this is something real. And I think, Michael, you're absolutely right. That, and this is a message to the business community, this is not going to go away. Because I've met some business say, 2 or 3 years, we'll keep our heads down, and then it's back to normal. I don't think that's going to happen, I don't think, yeah? But the other thing is, are the technicians that are going to be in these groups at the OECD, are they up? Can they meet the expectations of the politicians?
They will. I mean, if politicians give you a strong task, pursue this task, ask you not for immediate, but regularly results. As a civil servant, and let's face it, the OECD has a lot of people who are more or less in a civil service function, have to deliver. And saying we couldn't come to conclusions isn't an option. Therefore, they will deliver. The question is what way will they deliver. Because of the political pressure, it will not be some compromise, what we call a formula compromise, which says something has been done, but nothing has changed. And therefore, I'm pretty sure that the technicians, the legal technicians, which had in the past a lot of excellent ideas, but lacked the political momentum to bring it up, will have their day.
And I think this issue, getting a consensus, is one of the key things, because to me, one of the interesting things about the BEPS project is the institutional framework has changed. It's not just getting the 34 member countries of the OECD to agree, it's now also getting the non-OECD G20 countries to agree as well, so the BRICS. So what are you going to offer the Chinese and the Indians and the Brazilians to bring them on board? That's a difficult question.
It's a difficult question because, well, they will be better off with having nearly the same regulations as the others. Let's take the example of copyright law. We all know there were a few problems with China on copyright law. Yeah, I hear one or few laughters. Today, the problem is apparent, no question, but even China and Chinese corporations are invoking copyright law, especially when they have invented respective things themselves. May it be form of forms or models whatsoever. So at a certain level of development, the rules, what the developed countries apply for themselves, are in favor of those who have some advantage to the respective level. So therefore, an economy of China might have a different approach in the small or medium-sized corporations, but these big corporations, and not foreign-controlled, but sole China corporations, will have advantages from international legal tax law that is now among the OECD countries.
I think that's right, Michael, and that's what makes me a little bit optimistic, because it's not, if you look at the fastest growing multinationals today are not OECD-based multinationals, they are BRIC-based, yes? And if you look at where are multinationals headquartered, yes? Again, the fastest growing are the ones that are in China, in Brazil. And with that change, the interests of the BRICS become a little bit more aligned with the interest of the OECD. But of course, the question is, what happens to developing countries then? Who's going to protect their interest in the G20? Where's their voice?
Well, in the G20, there is absolutely, there can't be a voice for them in the G20 because they are not a member of the G20. But as you know better than me, the OECD countries have affiliations to these organized within the Global Forum, where the countries not members of the OECD are taking into the discussion, can voice their opinions. They are heard, and a lot of countries comply to OECD standards, especially on information exchange and so on, especially because they say it is advantageous for us to do so, because otherwise we will be excluded from a lot of business, respective investments from the organized or the developed countries. So they are included via the Global Forum, and a lot of countries, developed countries who are not there, have their review processes, and therefore they will be heard.
Is there a role for the United Nations tax group?
There is a role, but they are no substitute to the OECD. I have intense discussions with one of my colleagues who is a member of the United Nations tax policy or tax expert group. We do not have a second regulator in this space. The United Nations are so diversified in its political ideas, in its economic ideas, that the line OECD via Global Forum is the relevant group. So the United Nations tax expertise won't be, especially not in the next 10 years, a substitute for what the OECD and the Global Forum at the OECD does.
Well, I mean, I think it's the UN group is meeting in a few weeks' time, so it's going to be interesting to see what how they discuss that. But I think the key point that behind the issue that you raised, Michael, is that if you talk to business, large multinationals, what they want are globally consistent rules, yes? And it's the consistency has to be in all of the big markets in which they operate. Whether you're an OECD country or a G20 country, or whether you're Colombia or you're the Philippines, you basically need consistency. And that is very important because that's the way you minimize disputes. And there's nothing more difficult from a multinational's perspective than to have uncertainty, unresolved disputes, because that's a killer in terms of discouraging cross-border investment, yes? But one last question on the BEPS. I mean, I see this, and when you look through the action plans, there's a lot of emphasis on coherence, yes? It comes up again and again. What do they mean by coherence? Is it coherence between the different sets of rules, say treaties and transfer pricing? Is it coherence between different groups of countries? What's your interpretation?
My idea is that that we come to a coherence. What special legal definitions of tax terms really mean. In Germany, for example, we have a very many corporations who are designed as partnerships. Usually, we do not have these £100 limited in Germany. They are usually partnerships, and how to deal with partnerships, transparent entities in double tax treaties. It comes to mismatches, and therefore we come to coherence of legal definitions of tax terms to achieve two goals. The biggest goal is double non-taxation isn't an option anymore. Double non-taxation isn't an option anymore. So if you interpret legal terms under the guidance that a double non-taxation cannot be a result, gives you a direction for interpretation of legal terms. And the same happens to double dips, saying double dips are not accepted anymore.
Even Dutch sandwiches?
You say it. So
I quite like Dutch sandwiches myself.
Yeah. So if you interpret legal terms in a manner that does not lead to double dips and not double non-taxation, you have a direction that says a minimum taxation must be achieved. And this would lead to a coherence with this aim that is far bigger than any interpretation even the most inventive legal scholar can invent. Therefore, I think coherence is, from a practical point of view, how can we define tax terms or legal terms in a manner that doesn't lead to double non-taxation and not double dips.
Or neither double taxation as well.
Double taxation is the most successful achievement which has been reached by the OECD. Double taxation is nearly not, is nearly nil by these provisions. So we had a discussion in Germany. One of our tax courts brought an issue to our constitutional court, and it remains there, I think, for a few years. And the biggest question is there an implied term within the double tax treaties Germany has signed that double non-taxation is implied there? Obviously, it hasn't been written in the articles of the double tax treaty. But, I mean, if you analyze what a double tax treaty should avoid is double taxation. Double taxation demands that each of the participants has a right for taxation and renounces the right in favor of the taxation of the other. And if the other doesn't tax, and it would lead to a non-taxation, I think it's an implied article that double non-taxation is one of the aims in a double tax treaty. Nevertheless, this is a minor position within the tax world. A lot of people say we can only discuss the issues that are written down in the double tax treaties, and this is the avoidance of double taxation. But in my opinion, and I'm not the only one, double non-taxation is an implied aim, and therefore it should be directly addressed within the legal definitions because, well, there are other people who think different.
And I think this could be one of the positive outcomes from the BEPS study, that you actually get more of a balance between the need to avoid double taxation and the need to avoid double non-taxation. Yeah? I mean, that leads us quite nicely onto the second round, which is about the digital economy. Yeah? And, you know, the action plan has the first item in the action plan. Item 1 is we need to deal with the digital economy. And then in very good OECD fashion, they've said we'll create a group that will look at it over 2 years, yes?
Yeah.
So
it's the sound task to do the most difficult at the beginning, because if this should run, if we had final results within 2 years, we shouldn't start with the final item that is the most difficult one prior to the end. So the digital economy is the biggest intellectual issue.
And how do you define digital? Yeah, because that's always an interesting question.
Well, digital economy has both sides, has two sides. The first is entering into a contract via digital means. In Germany, we call it Fernabsatzgesetz, which is nothing more than having the respective offer and acceptance via digital means. This is not really difficult from a tax point of view. The entering into a contract via the internet. Second is what is delivered through such a contract. Digital assets. May it be iTunes, licensing for certain content, may it be films or whatsoever. There you have a content which is, which has no substance except bits and bytes. If it is accompanied by license arrangement, we have international legal prerequisites how to deal with it. The most difficult thing is, and I think 2 years is a minimum to come to feasible conclusions, is if you have nothing of the first both ones. The content is the digital appearance of bits and bytes on your computer. More or less, it's some sort of digital brokerage. May it be the sale of used cars via internet, in Germany, mobile.de, or may it be online dating, where the fees you pay is for brokerage service. And finally, the most abstract is the Google business, which is in a very simplified way, giving you information, hitting you to various links, sponsored links, where they won't sell anything, they won't sell items, they won't sell digital content, but just giving you additional information and how to treat a content which has no, where we have no form of regulation or form of taxable regulation that covers it. And the old provisions developed the last 50 years are not applicable in this content. And just think of yourself at this moment, if you, maybe someone of the younger ones do it, maybe of the older ones, you go to some sort of online dating service. I mean, where you...
Are you suggesting we should tax that?
Yeah, sure, absolutely. I mean, it's business content, and therefore it should be taxed. The question is, where is the respective corporation located? If it's in Germany or somewhere here, you can tax it. But if the server is on some tiny Caribbean island, who should tax it? I mean, the expenses, well, for dating services, it's no business expense, no, usually not.
It can be quite an expensive process.
It can be expensive, but it's not a business expense. But if you do it, for example, with used cars or so, if you are a dealer with used cars, you pay for your offer. It will be deducted for tax purposes in Germany, and the recipient with its internet corporation lies on a tiny Caribbean island. So how do we deal with a business content that is more or less digital brokerage? I have no sufficient idea. And when you talk to the law professors, here's one sitting there, maybe he can give us an answer. Well, yet I haven't heard one, not only from him, but from a lot of law professors. And since I have an academic degree, but I'm not a scientist, I have no feasible idea myself. And if this group of innovative academics and bureaucrats and in the OECD come up with an idea, I find it very helpful.
Do you think, in fact, that they'll end up with proposals which will have specific rules that apply to this sector? Or will they actually do the analysis and then come back and say, well, we need to reformulate the general rules so that it can deal with that particular sector?
It's up to them. I mean, at the end of the day, I want this business be taxed. And not only me, in the sense the money should come to Germany or Austria or Great Britain, but it should be taxed at least. And not maybe in America, but not non-taxed in some tiny Caribbean island. And therefore, if you come up with ideas how it can be taxed, it is advantageous, because now we have no rules that guarantee a taxation, aside from corporations who do these kind of business being located in countries who have a direct taxation.
So perhaps part of the answer is that to just let global warming do the work and sea levels gradually raise, yes?
No. No.
I'm being a bit facetious, but I think there is a real issue here. I mean, you look at the digital economy broadly defined. The big players are American corporations, yes? So it's absolutely essential that the US buys into this process, yes? Buys in a real way, and is prepared to consider changes which would have the effect that their corporations would face a higher effective tax rate.
Yeah, but that's not enough. I think dealing with America means you are dealing with the economic superpower. Not the only one.
They shut down quite often.
But they are open up. Nevertheless, I wouldn't try to invent ideas which solely belong on the approval of the American Congress. So we would have to have rules. If it is not taxed anywhere, then we have to have rules that say, in this case, we would call it a misuse and prohibit the expense for tax purposes in case it is not taxed anywhere else. So you cannot devise your own tax system on the approval, or the sole approval of other countries. I mean, that's that is giving up the least part of sovereignty there is left in the world.
But it's quite likely that some of the outcomes on the BEPS project will require the US Treasury to go to the Congresses. So in a sense, Congress will probably have a last say, particularly in the digital area. Yeah? I think it's an interesting political debate. That. Why don't we move on to the third part of the discussions, and that's related to, I mean, you can call it harmful tax practices, you can call it harmful tax competition, you can call it aggressive tax competition. But it does seem to me that when you read the newspapers, the emphasis is very much on aggressive tax. The finger is pointed at the multinationals, yes? But can you really blame them? Because what are the multinationals doing? In some cases, they're just doing what governments want them to do to take advantage of certain rules that have been put in place, yes? So do you think we can actually resolve this BEPS problem without making more progress on the area of what do we mean by aggressive tax competition, what do we mean by harmful tax practices, and what can we do to prevent that?
Yeah, it's necessary. I mean, you cannot base filing your tax return on an ethical basis. I mean, taxation should have an ethical basis, but what is ethical is in the eye of the beholder, and it's different. Therefore, you have to develop rules. Tax law, I mean, we are here at the center of tax law. Tax law is, as the name says, it's governed by law. Therefore, you cannot substitute defined or non-defined ethical behavior as a substitute for tax laws. But the biggest issue is, and in various conferences, especially with advisors from multinationals, they seem to be surprised that their usual answer is, but we comply with the tax rule in existence in every country. So tax evasion, criminal tax evasion is not the issue. And they say, okay, if I comply, everything should be fine. Yes, from a legal point of view. From a legal point of view, it's okay. But people govern, or people, govern the behavior of corporations not only whether they are in compliance with the local laws. I mean, if it is legal to dump your toxic waste in some African country, according to the local law in that country, you cannot answer to criticism, yeah, but it's legally, it's okay. You have to face respective reputation, not only risk, but reputation damages, and that is what happened here. The BEPS discussion is not a discussion about corporations evading tax law. It's a discussion about the question, is that enough? Is that enough? And saying it's not enough is not the answer. You have to give an answer in legal terms so that they have to change their behavior. And what is not enough is giving a bit more than is legally demanded.
You're going to say you smell the coffee in a moment, yes?
Yeah, you know the example I'm talking about. So making some sort of tax gift is nice, but I mean, let's face it, as as a Minister of Finance, you should not build your budget on tax gifts, but on tax that is due. And therefore, we have to switch our angriness, our idea that the current tax law is not sufficient into other tax law, into different tax law. Being upset is nice for philosophers or for political scientists or activists, and it is the start of change, but it's not the final step for change. The final step for change is drafting law that avoids or prohibits such behavior.
But I think, Michael, because so many people were upset, you know, all the headlines you get about tax multinationals not paying their fair tax, that's what got this on the political agenda.
Absolutely. Yeah? But being upset is not the answer. Being upset is the start. The answer is we change, or the respective governments or parliament changes the laws, and therefore we have a new normal, we have a new different tax law that doesn't allow these forms of let's say, tax minimization. Therefore, at the end, the a change by the multinationals can only be expected with different laws, because if there is a chance to minimize taxation, someone will.
But perhaps also part of the answer is to have this concept that is now in the OECD's multinational guidelines, that multinationals should comply with the spirit and the letter of the law, yeah?
Yeah.
And spirit is not something you can define from a legal perspective, but you know it, yeah? I mean, when I see an elephant, I know it, yeah? I may not define it, but I know it, yeah?
Yeah. And the spirit is not enough. If you want to define what should be the spirit, one of the topics is what I said before. It's if you have to define legal words in tax treaties or words in the tax code, you can define it with a certain aim, saying double non-taxation and double dips is not an answer, or it is not a definition that is accepted. So you define it in a certain way, in the spirit of avoidance of double dips and double non-taxation.
I agree with that. I think also, you know, part of the answer, in fact, to a lot of the BEPS issues, is to get tax to be more discussed in the boardroom, yeah? That, you know, not to leave it just to tax directors, but to have it as an issue for the CEOs, for the CFOs, because these people will not just look at, you know, the technicalities. Do I get my effective tax rate down from 11% to 10%? They will ask, what's the reputational risk? They will ask, what are the financial risks? Yes? And I think the more we can put tax into the boardroom, the more we'll try to resolve these issues. But you haven't really answered the question, Michael, of, you know, if we want to address BEPS, we also need to address harmful tax competition. What can we do here? Yeah? You're speechless.
Not really. I tried to give an answer what is suitable.
Give us the true answer. It's more fun.
The true, yeah.
You know, I know you don't have a government that should give you more freedom, yeah?
Well, my minister has done something that hasn't been expected by him when he demanded something that was unheard of for a lot of years. He said that in the group that discusses harmful tax practices, a discussion of tax rates is necessary. The discussion about harmful taxation has always excluded the discussion of tax rates. Tax rates, whatever high or low or nearly nil, isn't a matter of harmful tax practice. And not only I think, this is wrong. And my minister has said it, so it is not, in a private conversation, he has said it in the ECOFIN, we have to come up with a discussion of tax rates as a part, not only as a part of harmful tax competition. And this is something new which hasn't been accepted by anyone. Where they say, okay, this is the idea everyone subscribed. But the feeling that there is a prohibition to talk about tax rates has gone. Therefore, I think that the tax rate discussion, even if you come to some sort of minimum taxation in a sense that something is really taxed, has come up as an issue, and I'm pretty sure that in further discussions of the role and the scope of the harmful tax competition group, the discussion of tax rates will be included.
You know, I suppose the good thing is that the Irish are not going to get the presidency for another 15 years, is?
Yeah, that's it. But, I mean, as you have read in the newspaper, I think yesterday or the day before, the Irish finance minister has said that he is going to close the loophole in their company law, not in their tax law, in their company law that says you can have an Irish company be located in Ireland and not in Ireland in the same sense. So you can be located in Ireland, in Bermuda, and not be located there. So these, after Cadbury Schweppes, who says nearly every form of company law has to be accepted unless it is wholly artificial, thing needs a revision. And I think not a revision saying that Cadbury Schweppes in itself is completely wrong, no, but saying that what is wholly artificial. And I think letterbox corporations, where you have, most of you have seen the reports in TV, where you see a building somewhere in Amsterdam with having 2,000 corporations located there. I mean, even if you have a low estimation or a low level for being an active company, having no personnel, no single briefcase for themselves, you do not have always respective signs that they are located there.
You're exaggerating there, Michael. There's always a brass plate there, yes? Yeah. And you do need people to keep the brass plate nice and shine, yeah?
Yeah, I mean, you have seen these buildings. It's not
in Caymans.
In Delaware, where they have a small, really not big, not small, not big, a medium-sized building with 16,000 corporations located there. I mean, who says that this is not wholly artificial? And if you look with the same scrutiny at Europe, you find a lot of nice houses in the Netherlands or in Ireland, to name only two countries, where there are a lot of letterbox corporations located there, and the respective tax authorities in each country have to say, we accept it not anymore, and probably you will find a case which you can bring to the respective tax court in Germany or in Austria or whatsoever, and maybe bring it so that the Cadbury Schweppes case can be reviewed and say, okay, maybe it's wholly artificial, but wholly artificial is defined as follows. And as I said, if you define legal terms in the sense no double taxation, no double expenditures, I think that would be of a big advantage.
But perhaps it also means that the ECJ needs to review its mandate, yeah? And it's not just a question of freedoms, the full freedoms, it's also a question about how do member states protect their tax base. Because I think, in fact, that, to be quite honest, Michael, the member states, they give too much to the ECJ, yeah? And that was because they couldn't agree amongst themselves, huh? So maybe we have to review that. But I mean, I just want one comment on this idea that you have to have a debate on what the rates should be. I mean, that takes us back to Ruding. I can't remember what did Ruding suggest? Was it a band, wasn't it, of 35 to 40% corporate tax rate? I just don't know whether the EU countries are ready for that debate, yes. Because it was interesting in the statement that the Irish minister made yesterday. He did say we're going to change the residency rules, and he said 3 times, and I ain't touching my 12.5% rate.
Yeah, the question is not only is 12.5% sufficient or not. It's not Germany's or UK's or whatsoever Austria's task to determine what's the correct corporation rate in Ireland is. But what you can say is 12%, 12.5% on something, and not 12.5% on nil. So the question is tax rates and the tax base correlate. Usually they correlate inversely, saying very high tax rates, very broad expenditures, chances to deduct expenses. And I mean, if Ireland says 12.5% is enough, but on what is generated there, we wouldn't have a tax hole. The German tax in German is not a high-end taxation country, but we have 15% tax rate, corporation tax rate. The other nearly 15% come from trade tax on income, which is more or less a German specialty, where a few other European countries have a similar taxation, but the corporate tax rate is 15%, and you can't blame another country or a different country for having only 12.5%, but 12.5% on something.
So you want to change the debate then, because that's been an old debate in the EU about having a minimum corporate tax rate, from looking at nominal rates to looking at effective rates.
Exactly. Non-taxation or nearly non-taxation in my opinion, isn't an option anymore.
I mean, that I think probably stands a better chance than having a debate of the nominal rate, because when you look at what's happening in the OECD countries, I mean, the trend is very much downward, yeah?
Yeah.
I mean, the UK has gone out and they've announced the aim is to get to 20%, yeah? Now, again, this is going to be 20% on what, yes? And, of course,
yeah.
In the UK and in some other countries, I mean, Portugal, they're looking at introducing IP boxes for patents, yes? Where the rate is very low, 10% nominal, maybe lower effective, yeah? So how is the community going to deal with that? Because I know the IP box is on the agenda. I think we discussed this week, in fact, at the Code of Conduct group. How are they going to deal with that? And your minister has come out and made some statements on this as well, I think.
Yeah, the question is, can we really hope to abolish a tax scheme that 10 out of 28 countries have already introduced? I don't know.
You do?
No. Well, probably not. So the question is, how do we deal with patent boxes that not only minimize the tax burdens of these corporations, but especially a big part of those countries who generate IPs. If you generate IP, usually by using the manpower, the salaries, the inventory to create it and use the money paid there as a business expense, you should have the right to tax what has been generated and made into IP. The usual idea is using all the expenses, and shortly before it has reached the level of IP, transfer it to another entity, another country, for a minimum of revenue. Therefore, Germany has invented what we call Funktionsverlagerung, transfer of functions, and I think it might be an idea saying if you produce or you search for manageable items, or you research for what finally becomes IP, and if it's transferred, you have to value it, and you have to, when you value it, what is generated from it after it has been transferred. I mean, it doesn't make sense to say, okay, it costs that, and then I sell it and for a certain price, and that's it. You have to see what is generated through this IP after you have sold it in the forthcoming years. And that means you have to have a legal prerequisite that allows it. And this can be done unilaterally. Every country can do it themselves. And I think this is an answer to patent boxes. Making the research here, deduct the expenses, sell it to usually a very small amount into a patent box, and saying that's it, it is not sufficient. So you should have the right to look what has been developed and generated from this IP and demand a respective payment. The Swedish have come up with a very interesting idea, they say, and we are looking into whether it's really feasible. They say, we prohibit the deduction of license fees, we prohibit them, but we give a tax credit in the country where the license fees will be taxed. So, non-deductibly in the country of origin, but saying in the country where the royalties finally land and will be taxed, they get a tax credit here. That would bring those license tax havens out of business.
So there's a good topic. If anybody's looking to do a PhD, yeah, you're going to have to do it not in 3 years, but in 6 months. Yeah? But you've got a ready audience here in Germany. Why don't we move on to the last round, which is really what's the role of the EU in this whole debate? When I look at the debate, I can't help sort of say, well, if the EU countries were to adopt a consolidated corporate tax base, I never know whether to have 2 C's or 1 C, yeah? So assume it's 2 C's, a common consolidated corporate tax base, then many of these problems of base erosion and profit shifting would be resolved. Is that the case?
It would be the case if it would be adopted, but it won't be adopted. The chance for this tax base only lies when you drop the consolidation. At the end of the day, you are trying to establish a common tax base where the biggest question is who gets which share of the cake. You have a cake and who gets a share, and the legal prerequisites how to divide the cake is so difficult that I do not see any chance that there is a mutual understanding. And as you know, we knew unanimity in direct taxation, So the consolidation, how to share the cake, will prevent the whole directive from coming into force. Nevertheless, if we come to a mutual understanding how to mutual understanding of the respective tax law, aside from how to divide the cake, then a lot of these questions would vanish, because because how we come to a common tax base have already been resolved. So the CCTB will not see the light of coming into a tax act unless you drop one of the C's, respective.
Or perhaps unless you use the same process that's being used for the financial transaction tax, and you go down the route of enhanced cooperation, where you only need a small number of countries that would agree.
Yeah, enhanced cooperation, we have, all of those of you who have looked after the FTT a bit closer will find heavy discussion among the 11 who are interested in introducing them. The goal is the same as the beginning. We need an FTT. Germany endorses an FTT. But from the 11, how such an FTT should be described, what's its structure, they are wholly divided. 11 opinions, 11 really different opinions, how an FTT should look like. And we have a small consensus, usually starting with the sale of shares, which is more or less a share transaction tax or stamp tax or some similar form, but not an overall FTT based on shares, sale of shares, bonds, and other financial instruments. So the enhanced cooperation, we will see whether the enhanced cooperation as one procedure, how it can be used to solve more difficult tasks than before. The FTT is the biggest task where the enhanced cooperation procedure will be used for, and saying that it is a bright success, not at the moment. And at the end, one has to imagine it's not only the 11 who are discussing the project. No. The FTT is discussed by 28. Only the 11 who have subscribed to the establishment of the FTT are the last ones who have to decide on it. But discussing on the table are all 28 countries. And this leads to a few countries who use the openness of the discussion to bring court orders and to bring legal action against the FTT in general.
And we all know which country that is, yes? Yeah. I think at the end of the day, the FTT debate is going to end up as a glorified stamp duty, and that has one great advantage: the UK can sign up to it.
They won't, because your finance minister has already said in open court, I am against an FTT that has the same equivalent than the stamp tax, because the FTT is introduced on a union level. The legal level is European law. And he was against the adoption of a union law equivalent to the stamp tax, because it is union law. And therefore, he subscribed it. He would subscribe to the stamp tax. I mean, he gets the revenue from it, but having it as the method of union law is completely against the British intention, which tax law should stay, remain, or be invoked by the European Union.
And I think that the bigger question there, when you look at the agenda of the EU, whether it's the financial transaction tax, whether it's how the Code of Conduct group works, or the way that the 28 will react to the BEPS, one of the key things I think that the European Union has to be very careful about is not putting itself at a competitive disadvantage vis-à-vis the Americans, vis-à-vis the BRICS, vis-à-vis the others, which is why you need globally consistent rules, not just rules that are within the EU.
I mean, the death of any reform is the demand for a bigger one. So if there is a chance to reform something, and you have a lot of people who say, yeah, but that's not big enough. We are against it because not the whole of Europe, not the whole OECD, not the Global Forum or United Nations subscribe to it. It's the kiss of death for any reform. Therefore, if someone is really interested in reform, he should start with a few, hopefully what is called the tipping point, the point where others join in because it is advantageous to them. But any reform that is blocked on the sole basis that you demand a bigger one with more states subscribing to it, have a different political opinion. Their opinion is we destroy the reform by asking for a bigger one. So this is a common argument if you want to block a reform on any subject, is always asking for the maximum. And therefore, I mean, you see the political discussion even here in Austria, especially on taxation of interest and so on. Therefore, asking for the universal solution is asking for skipping the reform and for asking for avoiding any change.
But I think that is one of the advantages of having the G20 deal with the BEPS. You've got 19 countries that have to come to agreement, and in principle that's going to be much easier than getting 162 countries to come to agreement.
Yes, but I think the G20 having a unified political task may be the tipping point for reaching it. Yeah. It would be different if it were only the G8 or the majority within the 20. So a unified political position that the BEPS initiative is and what it should be reached is so much of political momentum in tax policy I haven't seen in the last 25 years. Usually it has tax policy issues are dealt with, tax politicians, finance politicians, tax professors. It has come to the agenda not only on the FT, but on the agenda of and on the front page of various other and even cultural magazines and cultural.
You're not going to talk about German bishops at this point, no?
Even they. I mean, just an anecdote. In the Chancellery, where I worked for 12 years, and in the finance ministry, it's the last 2 years, we get a lot of letters, and there are a few people who are writing letters on certain certain tax issues. And those who are the most outspoken on this are teachers, usually, and a lot of people from I say church people in general. They have issues which are not, well, tax specialists, but an urge to say that we generate the revenue we have, we need.
You know, I always say the best tax that was ever invented is the zakat, yeah? It's flat rate, the base is very broad, it's voluntary, but if you don't pay it, you don't get to heaven, yeah? So maybe that's what we need. We have about 5-10 minutes for questions, so we'll be very happy to take any questions. Could you please just announce who you are, your name, your affiliation, and whether you pay tax or not? Who would like to ask the first question? There's a gentleman in the back, and then we'll bring it down. Jan? Yeah. That's okay.
Absolutely.
Thank you. Well, just brief question regarding the BEPS project, and thank you very much for introducing us to BEPS. I think it's very much of an momentum currently. There is a thing which is a big thought to me within the BEPS project, is basically that, as I understand the whole concept, we had the forum on household tax competition for many years. And within the forum on household tax competition, it took approximately 10 years to reach the end of the project. How do you think we will manage to go through the BEPS project within approximately 2 years? Because the agenda is very tight, so I'm somehow puzzled by the idea that it will be able to achieve it aims within this short period of time.
Yeah, I'm optimistic because it is a project where the task came from the head of state of the G20. It is not a project where a very, let's say, isolated group of tax technicians think something should be done. If you get the task of saying you have to produce this or that item within the next 2 or 3 years, we put the money in it, we put the pressure in it, we put personnel in it, and we demand an answer. Then you cannot, you can be sure that the participants doing the job are under a constant threat that they might not only lose their job, but be otherwise
put into jail.
No, not put into jail, but being demoted by not producing results. So if results are demanded, and especially the result, you have to come to a conclusion.
And
that helps.
And this is because, you know, I was pretty instrumental on the harmful tax project, yeah? And I think the mistake that we made is we didn't set very tight deadlines, yes? So it was a project that went over 10 years. It hasn't finished, I hope, yeah? But you do need these tight deadlines if you're going to get, because politicians will go away, they'll change. Yeah, 2 years in the life of a politician, it's a long, long time, yeah? 10 years, it's eternity, yeah? Jan, you had a question?
Yeah, thanks. My name is Andrew Kirk. I'm here, a student in the DIP program.
But he also works for the World Bank, just so you know, yeah?
So, I'm working also part-time for the World Bank, so I have to admit I'm not paying any tax. But my question relates back to the earlier part of your discussion and Jeffrey's question on developing countries in the context of the BEPS agenda. I think you're right in emphasizing that really with the G20 mandate, there is an enormously powerful political momentum. But looking at some of the issues, and looking at especially these administratively constrained countries or administrations that face profit shifting risks maybe that are more basic, finances could be more basic, and the discussion obviously in civil society looking at the BEPS agenda has been a lot on civil taxation and the role of, for instance, withholding taxes for developing countries. So my question is whether you don't think that that's a little bit of a missed opportunity of not taking that on as part of the BEPS agenda more aggressively, or looking at it more specifically, and thereby building a broader momentum for the agenda.
I tried to answer it with the argument I had a few minutes before. You have to have a core group. usually in an already designed infrastructure, organizational infrastructure to do such a work, to establish not only countries that are either G20 or are interested into it, and make it some sort of general assembly of states dealing with tax problems, wouldn't give the momentum, or would lose the momentum of coming to results. I mean, look at the Kyoto discussion. I mean, if you want to have 120 or more countries, if you look even at the meetings there, where everyone says what he thinks is right to say, and how to combine it into a resolution that will be adopted by all participants is usually without any sense. If you break it down on your day-to-day business, if you have a seminar discussions with 15 to 20, usually you come to conclusions. If you do it with 40, 60 or 100, you have a few who are saying something and a lot of who abstain and think, okay, the final result is not in my scope of what I would confirm, so I'm against it. So you have to have a core group. The core group should have enough political power, because they are mostly affected by it, and therefore I found it very helpful that this tax policy issues could not only find the support of the finance minister, which is big enough, but the support of the head of states, respectively the government heads. Therefore, that's it. And
perhaps one comment on that, though, is that, you know, even though the project is led by this joint group now, it's OECD and the G20, yeah?
Yeah.
And of course, the OECD is 34 countries. So the Irish are going to have to agree, the Dutch are going to have to agree, the Swiss are going to have to agree, yeah? And the dynamics of that, it's very different from the work we did on the tax havens. The second comment is, I think, Jan, you're right, that governments are going to look again at the issue of withholding taxes. And that's going to be part of a broader discussion of the division between the source country and the residence country, yeah? And that's why this project is so difficult, because it's not tinkering. It's standing back and saying, are the existing rules up to scratch? Do they work, yeah? And frankly, at this stage, nobody knows the answer.
No. And we have found the alternative to the withholding tax. I mean, FATCA has changed the whole discussion on withholding tax versus distribution of information. No. It was not the former German finance minister who said, we mount the cavalry to address the Swiss. It was more the American Third Tank Army who said, you do it. And we are those countries like Germany, like various other countries, are the beneficiary of this work. And therefore, I think the American demand for FATCA, and I do not know any country of relevance who does not comply in Model 1 or Model 2, has changed the whole discussion on withholding tax versus distribution of information.
And that should be noted by our Swiss colleagues, because at the end, rubric, which you almost signed, you almost signed, it's, forget it, it's off the table, it's the past. Because in fact, what the Swiss have done is that they've given themselves the biggest compliance burden around the world. Yeah. There's another question.
I'm Nilesh Papaya from India. Yeah.
Oh.
On the e-commerce, the discussion on specific rules for e-commerce taxation were discussed as back as in 1997 in the IFA Congress, when Professor Bloomberg suggested that the PE principle is not sufficient and we need to have specific rules. Is it not surprising that till today we are still discussing whether we need to have the new rules or what should be the new rules? Should we not have been going much faster? And looking at the Indian experience, perhaps the solution is to have some source-based tax withholding so that each country will get the share in the pie.
Yeah, I think perhaps I could take that one. I mean, I think that links very much to the question that the World Bank colleague here raised, that at one point the BEPS will have to get into a discussion of source versus residences. Yeah. And there are a lot of countries that don't want that discussion to start. There'll be a lot of conflict between, on the one side, the BRICS, on the other side, some of the big OECD countries, the G7 countries. But I think it's a discussion that you do need to have. And my own feeling is that one outcome of that discussion is that OECD will have to reconsider its position on withholding taxes, because our position was always get rid of them. Yeah? They're a barrier to cross-border activities. Let's just use treaties to get rid of them. Yeah? And maybe the OECD will have to come back and say, well, perhaps that was the wrong direction to go. Yeah? And it comes back to your point, Michael, of the emphasis was very much on eliminating double taxation. Well, now we want to balance between eliminating double taxation, but also eliminating double non-taxation. I think we can take perhaps one more question, if there is. There's one. Yeah.
Hello. My question is about the BEPS. We are talking about only artificial arrangements, but and how to counter them. But it seems like the artists, as we call them, or the tax practitioners, are already a step ahead. They are already talking about how to put on content in their conduit companies, how to counter the BEPS. So aren't we dealing with yesterday's problem when the problems of tomorrow is already coming forward?
But you see, this is why the title of the speech is In a Post-BEPS World. But Michael, you may have an answer.
Yeah. It doesn't surprise me. I mean, as I said at the beginning, I'm a fiscalist, other are artists or whatsoever. We are dealing, which share should we get from the same cake? So expecting that the tax advisory profession says this is BEPS and we do not do nothing would be naive. Sure, they are trying to counter it, but if the answer is we put content in the conduit, there might be a corporation that actually has material business and isn't just a letterbox. And it shouldn't sound it shouldn't sound things. But if you have these houses I told before, where you have 16,000 corporations located there. I mean, if they only had one or two, you have to build a second skyscraper just to make something active there. I mean, if we build measures or establish measures that avoid the taxable or the existence for tax purposes for these letter corporations, we have to put, or one has to put, material and material work and material existence into these corporations. And if doing so, one of these aims of BEPS is fulfilled, we do not want to abolish competition in itself. We will have tax competition in the future, but what we want is that non-competition takes place, and allowing letterbox corporations for tax purposes is an advantage, and for tax purposes, and is finally shifting the competition for products, competition for better services, just to a legal framework. And therefore, by demanding more on them, leads to better competition in areas where we want competition. And saying I have a legal structure or a tax structure that allows a taxation of nil is not an advantage to products, and it's not an advantage to services. Mm-hmm. It is an advantage only for nationals or internationals staying there or pretending to stay there. I mean, it's a scam. A corporation that does nothing than being in the register of corporations and nothing else. It's obscene and it's a scam.
So what this means is that you've chosen the right profession. There's a future for tax professionals, yes?
Absolutely.
But you're going to have to accept that you're going to be working in the Caribbean. No? I'm being a bit facetious.
Everyone who lives in the Caribbean, it's nice for a few weeks. And after a few weeks, it gets boring. Even if it's a sunny place, and you know the old saying,
sunny place for shady people. We could sing together, yeah? Yeah. Michael, that's been great to have you with me for this conversation. I think I've learned a lot. It's been amusing. I hope you as the audience have also taken away something from this. I'd like to thank the audience that's out there, and I know it's a bit frustrating not being able to ask questions if you're in South Africa or Brazil, but we just haven't got the technology that enables us to do that, yeah? The next fireside chat will take place here on the 10th of December, yes? And if you have any suggestions for topics, we're very open to have that. So once again, thank you, Michael, for that. Thank you, Rene and Glenn, for setting this up. Thank the Vice Rector for giving us one of the nicest rooms in this new campus. And we look forward to seeing you on the 10th of December. Thank you again. Thank you. We should give a hand of applause to Michael.
And allow me one sentence. If from now in a year nothing has happened on the BEPS project, it is your urgency to write a letter to your respective MP or your respective tax administration why something hasn't happened.
I think that's great advice, isn't it?